The Kudlow Report begins right now.
But we'll put that aside. Diana, stay with us. We want to pose the question, is the American dream of home ownership dying, especially when you see how horrendous the housing data has been over the past 2 days? Housing prices, mortgage rates extremely low, and yet people are still choosing to rent rather than own. Why is that? Here now is Shari Olefson, partner with Fowler White Boggs, author of Foreclosure Nation, and Jonathan Miller, president and CEO of Miller Samuel. Guys, good to see you. Shari, let me start with you. The dream of home ownership in America, is it dying?
Well, the dream is being reshaped, and I think in a very good way, too, because we got away from what was the traditional dream. The American dream to our grandparents was self-sufficiency. In terms of home ownership, it meant owning your home free and clear, not burdened by some big mortgage, and that was one of our biggest downfalls. So hopefully what we're going through now will help cleanse us and reshape the American dream so we're back to self-sufficiency. How about honoring your obligations, like maybe to a bank, and owning your home free and clear?
Jonathan, when I look at what we went through for the last couple of years, I don't know that housing boom was all about the American dream. To me, it was all about Americans turning into speculators.
Well, it had nothing to do with housing. It was really a credit boom. That's where we saw the focus. It was all about financing. People essentially didn't have to have a job to get a mortgage. That's all changed now. I don't think there's anything wrong with the American dream. I think the problem was the vehicle to obtain the dream and unrealistic expectations are what we're sort of dealing with at the moment.
Diana, don't we still have incredibly high levels of home ownership compared to the rest of the world? Aren't we still well above 65%?
Yeah, we are. I mean, we dropped down from the height of the housing boom, of course, about 2 percentage points down. But look, what's most interesting about it is not necessarily home ownership versus renting, but household formation. And that's the key that a lot of the economists are looking at now, is that household formation is way down when you look at the census reports. That is people coming out of college or starting new families, new homes, immigrants coming in. Students are graduating and staying with their parents. They're doubling up. They are not forming the new households that we need to see growth in the market. So you could say, is the dream of home ownership over? No, it's not over. It's just having a hard time getting started again right now because of the economy, because of lack of jobs, and because those new potential home owners are at the lowest point in the pay scale now, and they're having the hardest time getting the new jobs.
Especially with the expiration of the tax credit. Now, Shari, is now a good time to buy a home, or do you expect prices to decline even further?
Both, Michelle. Now is a great time to buy a home, and buyers are standing on the sidelines not because it's not a good time to buy a home, but because they're just not confident in the overall economy. But we've got prices are great, interest rates are great, there's plenty to choose from, and buying always beats renting because, you know, Americans traditionally have had a hard time saving. The home has been the #1 nest egg. Before the bubble, the average homeowner was worth $87,000. The average renter was only worth $4,000. So even though some people might argue, you know, you could better invest that money in the stock market or someplace else, the fact is people don't. So if they don't own a home, they're not investing it, they're spending it.
I take issue when you say it's always better to buy than rent. Clearly, it wasn't better to buy than rent when you look at 2005 and 2006. So that's not always necessarily the case. And when you tell me, though, when you tell me, though, you think prices are going to go down, why not wait?
Well, here's the thing. If you're a new home buyer right now and you're deciding whether to buy or rent, and it depends on what market you're in, but if you're in a market where theoretically the prices may go down another 3 or 4%, and we never know, and good investors will tell you you can't wait to buy at the bottom, your choice is either to sit around and wait and continue paying rent monthly, which is giving the money to your landlord, or buy and risk maybe a 3% loss, but at the end of the day, you're ahead of the game because you haven't thrown that rent money away.
Jonathan Miller, what do you think right now? If you have the money, is now a good time to buy? Of course, with all the caveats that you got to put a lot down, and it's tough to get a loan.
Well, look, I think we're being misled by the 27% drop in existing home sales in terms of making the decision. If you look at sales activity as a result of the tax credit in the first half of this year, we had sales levels artificially high. Where did those sales come from? They came from right now, where we would have expected to see the transactions. Those were incentivized to move before April 30th. So now we're artificially low. The difference is a 27% drop. I think when the smoke settles, I think that what we're seeing here is the tax credit did not boost the housing market. Simply, it moved the chairs around in the room, and that's really it.
Yeah, but Jonathan, then how do you account for the new home sales number today? How do you account for new home sales number today, which is not affected because it's contract signed? So we did see the big drop-off for new home sales in May. We shouldn't be seeing that drop-off now. We should be seeing it bump up again. How do you account for that?
Well, I think you have to look at the perspective. Right now, new home sales are 20% of where they were at the peak. So we're quibbling about very small up and downs because we're dealing with a much smaller number than we were dealing with before. And I really think that what we're dealing with right now is it's all about job creation. We have to have unemployment rise in order to ease, for credit to ease, for lenders to provide financing for consumers. Until we have that, I don't think anything's going to change.
All right.
That's going to be fundamental, but there's also an issue with a 7 million shadow inventory, 25% underwater. We've still got a lot more down the pike. That means more bumps in the road.
Absolutely.
Which brings me back to Shari. Why would I buy then, even if I have the money? Wait for the price to fall even further.
Because the other alternative is to rent.
Okay, but if you can get a much better, much lower, our interest rates aren't going anywhere anytime soon. If you can get far lower principal on the house, it makes a lot of sense, actually, because you're buying an asset. Go ahead.
Look, I think part of the orientation, the reason why we got into trouble is exactly that essentially housing is a long-term investment. It's not a stock. It's not a short-term investment for most people. So you can't really time the market in terms of a matter of months or quarters. Right now you're looking at incredibly low mortgage rates and a sharp correction in prices. To some people, if they're going to be in the home for 10 years, it is an opportunity to buy in. For others, it isn't. Buying isn't for everybody, and that's the takeaway.
Right, and buying now means buying with a good loan, with a decent down payment, and with a sustainable situation, too.
I don't know. You're buying a $100,000 house, and you think we're going to see another 10% drop? That's a pretty substantial decline. I would rather wait it out, but we'll see. And I think that may be the problem. Even though, Diana, when I see the move in the home building stocks over the last couple of days, I wonder if they aren't signaling a bottom.
Well, they were signaling a bottom. I mean, the experts thought that it was at a bottom, but then again, you see the dip today. But the stocks are so cheap right now as it is. As we said, that's why there are a lot of folks wanting to get in on the home builders right now, because how much lower can they go? It's a bargain. But again, you might see some more M&A activity. Some believe it, some don't. But again, you've got these builders out there who have lost so much share, who have lost so many potential buyers that it just makes sense for them financially to get bigger.
But I even read that a lot of these builders are actually buying land, which signals to me that they think prices have bottomed.
Well, look, they have to believe in the market. That's what they do. They're builders. If they don't believe that homes are ever going to be built again, then they might as well just get out of the business. So the time now is to buy up the cheap land. And that's what Toll Brothers was doing, is buying up land and holding it, because they know that once the market comes back, they're going to be sitting in the catbird seat when all that demand starts coming in. We know that there are potential buyers out there. They're just not buying now. When they do buy, suddenly there's not going to be enough supply of the new homes there, because we're at such low levels of construction right now. So buying up land is not exactly a bad idea.
Yeah, pent-up demand. All right, folks, good discussion. Good to see you, Shari Olefson, Jonathan Miller, and Diana Olick. Thanks so much. Coming up, stocks snap a 4-day losing